lot of people along the way have found my vision inspiring and wanted to participate. And the result of that is that I've been able to raise over $14 million in the last 2 years.
Welcome everybody to today's Hero Capital Raising Party. Yes, introduce yourself. Yeah, share with us a little bit about yourself and how you got into this world of
Sure.
syndications.
My name's Sgaan. I'm with Raising Wealth Properties. We're a multifamily development company, and we specialize in finding undervalued land throughout BC specifically. And our vision's to build 5,000 units for families in British Columbia over the next 10 years. And so we're really excited about it. A lot of people along the way have found my vision inspiring and wanted to participate. And the result of that is that I've been able to raise over $14 million in the last 2 years. Not as significant, not as much as some of the numbers I see you're displaying, but I'm still very proud of it and very happy to help families really grow. And so how I've been able to really grow at that level is really looking for undervalued sites. And I've changed my focus. A big problem that people have right now with development properties and even cash flowing properties is interest rates. So I've been able to negotiate with vendors now on a frequent basis for long closes. And what that does is that really increases your profits, because if you're paying a 12% loan on your land loan, then that really cuts into your profits. And so that's one metric that I use. I have 4 metrics that I use when we analyze development sites that really de-risk them. One is that I won't actually do a deal unless I can get a 20% investor IRR or better. And the reason for that is that if the market fluctuates at all, it gives me the ability to pivot and move and to take that market fluctuation because I've ran the property, underwritten it at such a high return. So that's one metric. Another metric I use, I always make sure to buy them at least 10 to 30% under market value. And then a third metric is I always run my rents and revenues below what they are today, so that if they do increase in the future, that's great. And then I always take my hard costs and I increase my hard costs from what they are today too. So I run a lot of metrics, and in some cases you can really have a lot of the deals that don't make sense. Pretty much 99% of them don't make sense because of that heavy criteria. But what it does is when the market fluctuates as much as it has, it gives us the ability to still come out with good quality deals. And so that's what we've been able to through this duration. I've had sites that I bought that are financed, and we've been able to hedge that rate increase because we bought the properties right at the beginning.
Very
so I'll
cool.
stop talking and let you ask some questions there. Sorry.
No, that's perfect. And just raising 14 million in the last 2 years is really good. In the last 2 years has been among the hardest to raise for. So 14 million in the last 2 years is nothing to sneeze about for sure. What had you chose multifamily development versus existing value add as the niche?
Really, what I started out as an early investor, I did the transitional thing where I started with single family and then single family house with a suite. And then I started working my way up duplexes, fourplexes, and then I looked at apartment buildings, but I don't really know what the equivalent of Vancouver to the US market would be in terms of what city would be equivalent to that, maybe New York or something. But what I was finding is that just the cash flow wasn't there. I found a lot of cash flow investors are happy. Oh, they're making $50 a door. And I'm like, oh, that's doesn't really excite me. Like my number was like 300 to 400 a door. I'm like, yeah, let's do it. It's between that and because as a fisherman as well, you spend a lot of your time risking things and it's value versus reward. Really why I transitioned from cash flow, existing buildings into multifamily development is because I found that I could find a raw piece of land and increase the zoning and increase the value on that land in a short order without having to deal with tenants or anything. Because the minute I rezone the property, it's usually worth anywhere from 30 to 50% increase in value.
Very cool.
And so that's what did it.
Okay. So and all of your projects are there in Vancouver, is that correct?
No,
Or
they're
at least
throughout
in
BC.
Canada?
I've got in Canada, I've got projects on Vancouver Island, Kelowna, and in the Lower Mainland. What I do before I invest in an area is I research the economic fundamentals heavily. So we make sure it has high population growth, high job growth, and a diverse economy, so it can hedge against any market fluctuations.
I see. Okay. And your investors that you raise capital from, are they all there in Canada as well?
Correct. Yes. Yes. I haven't
Mm.
structured my LPs yet to take out money outside of Canada because I haven't needed to yet. But as I'm growing to scale here, I probably see that happening in the next year or two, I would anticipate.
Okay. Yeah, you mentioned about going to networking events, going to events, network, and raise capital. And I see several people have questions here in the chat for you, but I wanted to take a step back and have you share what are all the different ways that you have tried to raise capital, and then yeah.
The networking event is just one entity. So to give you a context of where I'm running at, not only do I have my own investor list, which I keep revisiting as new projects come up, and then keep them with updated emails and stuff. I also have an EMD company that works for me that raises capital, as well as another private capital raiser. And then I'm looking at bringing on another third capital raiser, as
Mm,
well as I've got someone in my team that does full-time marketing as well through social media. And I've started posting just in the last, I'd say in the last 4 months, I've made a mission to try and post almost every day or every other day on Facebook and LinkedIn. And so those things have been slow in leads, but what it does is creates your presence. And those are all the facets that I'm running, as well as I'm attending events myself whenever I can to raise capital. And so those are all the things I'm doing. I have basically I have about 6 things that I'm running all at once consecutively, as well as I'm also writing a book right now, 75 to 100-page book to increase my credibility that I can offer out to people, also helping and raise capital. So what I really learned is that it's about the big picture and it's about relationships really that will help you grow. And so that's really what I'm branding.
gotcha. The capital raisers that you mentioned that you hired, now are these in-house people or are these broker dealer type people? Like,
Broker dealer. Yeah, broker dealer. And then another person in house is just in charge of my marketing, which helps me with the social media content and stuff like that.
Okay, very cool. And then yeah, so let's circle back about you going to networking events and coming with intentions, coming prepared, what your pitch is gonna be. Give us your thought process on that, how you go about selecting the event to attend, and then, how do you best prepare? And even like the Shelly asked about the scripts that you use when you attend these events. So give us some insights into that.
Yeah. So what I'll do is I will look at the event and who's attending, and then I'll research a few of the attendees and I'll research some of the speakers and try and line up the content. And typically, I've gone to a few events where I've had value that's free, but typically the ones you paid for, sometimes you get a little higher caliber of people that are going there. A lot of the free ones, you'll get a lot of people that haven't invested before in anything. And if you're in the capital raising mode, you want to connect with the right audience. And it's not that everyone's got an interesting story and it's wonderful, but before I go to an event, I look at those things, the attendees, the people speaking, what caliber of stuff they're talking about, and then I'll make a choice to attend those events, and then obviously my schedule. And then what I do before I attend it is that to be honest, before I attend the event, I envision myself being successful. And I envision myself closing 3 people at that event with my story. And what does my script entail? My script entails, I'm Sgaan. I'm with Raising Wealth Properties. I just told you my script. I provide returns that can be life-changing for your family. Is this something that interests you? And then a lot of the times they say no, I go, hey, just by the way, do you know anyone else who'd be interested in this great product that's going to help change their lives? Because that's what I'm about. I want to enrich people's lives and change people's lives. And that's what I say. And I get usually a pretty good response, but sometimes you get nothing.
Right. That's really good. Yeah. A lot of times, and like the way that you research the events and research the attendees, that's really good because most people don't do that at all. And yeah, a lot of times just being in the right room with people that needs to invest, what you say matters less than just who they are and the need that they have to invest. Like one of the, yeah, one in real estate, like I used to do a lot of single family homes, and we always talk about sellers who need to sell versus sellers that want to sell. Investors are the same way. There are investors who want to invest, and then there are investors who need to invest because it could be that they have big tax burden, could be a number of reasons why they need to invest. And so when you get yourself in a room of the investors who need to invest, yeah, it does make having that conversation a lot easier for sure.
And sometimes people think you have to say something that makes you inspiring, but the reality in life is that if I start to ask you questions, for instance, Tim, about what you do and your family and how many kids you have and what you do for fun, that is going to create instant rapport. Let's back up a minute. You have to be sincere and genuinely want to be interested in these people, which I do. And if you start to ask people questions, it qualifies them in a way because you can understand where they are and if they're a good fit for the type of product that you have. And then
Right.
as well as it builds that rapport between you as well.
That's good. Yep. I like that. Okay. Ramiro asks, what do you say is your usual minimum investment? Do you have
Uh,
lots of folks that turn away because they won't do the minimum?
yeah, I'm accredited investor stage. I don't have an OM, so I just have a subscription agreement. So my minimum investment's an LP 50,000 with accredited investor. So they've either got to be friends and family or meet the accredited investor requirement. And so
Okay.
what that does is it pushes me to people that are a little shortens my pool, but it also pushes me to an audience that can meet those investment minimums.
Okay. Very good. Hey, as I'm asking Sean questions here, if you guys have questions, feel free to put in the chat
Yeah,
and I
I
can ask them
can't
as well.
respond to them. Sorry, I'm multitasking.
Yeah, no problem. Yeah, do you do professional like fishing um boats, or what, share with us a bit
Yeah,
about your fishing
yeah.
here.
I don't know if you can see this, but that's the ocean
It's
right
it
now. I'm actually out on the ocean. It's probably a little blurry, but yeah, I've got a 55-foot commercial crab boat, like deadliest catch. We got 1,200 pots and we haul through those. Why do I do those and real estate investing? Because crabbing is a high adrenaline fishery and we work 18, sometimes 24-hour days and it gives me excitement. I like real estate as well, but it's more of a slow moving thing. So that's why I still do this as well.
very cool. And thank you so much for tuning in, even though you're out crabbing. That's
Problem
really
kind of caught me
awesome.
off guard. I wasn't expecting to do an interview, but I'm in. Why not? Let's swing it.
I love it. Yes, I love it. Okay.
And like I said, I'm
Amy.
here to provide value. Any way I can help enrich people's lives and help them out further their lives for their families, I'm always happy to help.
Okay. Amy asks, what type of networking events and how do you find out about them?
Online networking events, what type? I'll attend like a golf charity event that has specifically for lawyers or accountants. I'll attend a doctor's event, any doctor's events I can find, financial advisors events. For example, there's an event coming up in Toronto, not related to the US, but it's a REIT event put on by Informa, and they'll be talking all about the financial markets and what's going on with a bunch of REITs coming to that area, which do invest in private equity, real estate. So that's how I'll find them online. I look at my local meetup groups. For example, your event, you're hosting an event, I believe, in the near future here. And where is it?
Houston.
Yeah, in Houston. So you're hosting that. So I'll check out yours. I'll look at other places. I'm in Canada, so I don't go to the US a lot. But in my area, I'll look for meetup groups and things that are happening in my area. I'll go on Facebook. So Facebook groups is a really good avenue for real estate Facebook groups. You'll find out a lot and meet a lot of people that way. And then you just go in there and you start talking about what you do. And then you also go in there and you look to add value. You need to be able to go in there and if you have any real estate experience and you've had an experience getting over something that's a problem, then you go in and share that experience. And if that experience can help someone else not have the same problem, then you've helped them. And from that, you get to be known as the person that can help people. And from that, you get to be more well known.
I like that.
Such as
Yeah.
yourself. Such as yourself, for instance. You've been posting these, and I know you've exploded in the last year.
Thanks. Yeah. And if you guys are new at this and you might not have the confidence yet, just go observe. Yeah. I know for me in the beginning, when I started attend events, I didn't know what to do, and then I just made notes for next time. What can I do better next time? And you just improve
Yeah,
from
I,
there.
I would encourage anyone who's just first starting out in real estate and never has done any of it. Number one, pick up a book from someone who's done real estate. And number two, attend one of their courses because it's worth your weight in gold. I've spent hundreds of thousands of dollars on education to get to where I'm at. I can analyze a development site in minutes, but it's taken me years and hundreds of thousands of dollars in education, learning from other people to be able to do that. And the little nuggets you learn from that one person, every event or everything that I attend, even your events, I get one little thing out of it. I'm like, oh yeah. I'm like, okay, I can go back and implement that. And sometimes that one little thing can literally make you hundreds of thousands of dollars.
I love it. I love it. Let's talk about your book that you are writing. What is it about, and who are you targeting in that book?
So really what I'm targeting is beginning, intermediate, and advanced investors. And it's going to be about a little bit about my life experiences starting when I was 14 and I ran away from home to Ontario and how that shaped the beginning of my life. And then the lessons that I learned in real estate along the way. I recently put out my very first podcast and I spoke about, I think I've done about 20 property deals in the last number of years, and I spoke about each one and the experiences that I learned in them. So the book is going to entail that with some beginner experiences that I entailed, looking to offer maybe 3 to 5 tips in the beginner section, and then intermediate, what I've done to transition to multifamily on the small scale, and then from multifamily to larger deals on the advanced. And I'm looking to provide value for each entity.
Gotcha. And it sounds like your tips is going to address both the active investors, people that want to run the business themselves, as well as the passive investors. Is that correct?
Yes. Yes.
Okay, very cool. And what have you decided to go the book route?
What made me decide to go to it?
Yeah, yeah. What have you decided to write a book and using it as part of your market?
I'm also part of ClickFunnels as well, and the Russell Brunson story. And then when I started looking around in my own circles, every single person that is invested in real estate or is successful investing in real estate, it's an instant way to boost your credibility. So, if, Tim, you tell me you've written a book instantly, subconsciously, even without even thinking about it, your credibility is already up there compared to just saying, "Hey, I'm so and so." And so it's just a weird human reaction. And then the other thing is I thought, you know what, I should share some experiences. A lot of the times in our life, we have these things happen and we think, everyone knows. And I don't want to teach this stuff because I'm at a level that people are much more advanced than I am. But then someone came to me that hosts our events and he says, you've forgotten more stuff than most people know. A lot of people don't know about these things. Like I've done skip transfers, double closes, vendor takebacks. I've done all of these things. And so I want to share some of those.
Yep. Yeah. So I'll share a hack for all of you. What Sean's talking about with like being a book author and sharing your experience. That's the fastest way that I know to build your authority and your credibility. And the reason why is because for most of us, if you live in a first world country, you have been brainwashed for at least 12 years of your life to listen to your teachers. And so anytime as adults now, anytime that we put ourselves in the position of a teacher, of an educator, it's instant authority, instant credibility. Because because we're just so used to it. We've been brainwashed like, hey, the person on stage, whether it's a podcast stage, whether it's a live in-person stage, the book author, even being a Facebook group owner, any types of a leadership position, educator, it puts you it gives you, instant authority, instant credibility. And so it's a hack that you all can use very,
I would add to
very,
that
very
hack
quickly.
there, Tim, as well, is that your book, just because we're all on here interested in investing in real estate, your book doesn't have to relate to real estate. It can be a life experience that you've experienced. For
Yep.
instance, someone that's had learning disabilities, or someone that had an injury and got over that injury, or someone that has a health tip that they learned. It can be about any one of your life experiences in your life. Because why are you an expert? Because you lived it and you solved that problem, and you now can share that with someone else.
Yep, I agree. I love it. Yes. All right. Let me see. Yeah, any questions you guys have, go ahead and feel free to put in the chat. Sean, what do you share with us a bit about your deal volume? How big of a deals that you do, how much money you typically raise per deal, and how many deals are you
I
expecting to do
raised,
this year?
so deal volume in the last year, I've got about, what have I got? 280. I have about 450 units that I've put under contract, development site wise. Average deal volume will be around 6 million per deal, but I don't need all that capital up front. So I'll take some initial capital. I'll raise 2 million for each deal, and then that'll bring it through the entitlement process. And then I will raise the remainder once we get to construction phase. And that's my deal volume. What do I typically look at? Before the last 6 months of actually in the lender market and in the world of finance, the market for land money and financing has tightened right up. Guys are really scared. There's projects that are not doing good both in Canada and the US because they bought the projects at a low interest rate. Now they're getting hit with a high interest rate. So it's made financing them harder to do. So what I've done is the larger sites I've scaled back, looking for 80 to 100 unit sites, which is still a large site because you're still dealing with about $45 million construction loan. So those are still substantial, but those are nice bite-sized chunks. And right now we're building to sell to REITs or private investors. But my long-term vision is to build and keep for cash flow, because at the end of the day, we're left with a brand new rental product at the highest rental rates with no tenant turnover. And we're running today's rates. And in 99% of the cases that I'm seeing of all product that's being built here, everything is coming in about 20% above what the rates are today. So when you go to finish your project and you refinance it, there's usually enough capital there to either pay back all your investors and keep the product, or to sell it.
Very cool. You mentioned you raised.
Pardon me?
No, go ahead. Finish what you were saying.
I specialize right now lately in rental product, because there's a great program through the government that gives us up to 90% financing on those. But they're also really tightened up on qualifying for those loans through the government. But I do also do condo projects, but the condo market's pretty stalled right now. So rental to me is one of the best investments. We've got a severe shortage. As Canada overall, I said I research fundamentals. We've had 2.4 million people into Canada in the last 2 years, which is the same population growth as the US, and they've got a population of 350 million. So I'm very confident that whatever I build is in high demand.
I see. Very cool. You mentioned that you raise it in stages. So, you do your first raise, get to entitlement, do your second raise, do the development. Each time that at each stage, do you sell it from one LLC to the next LLC, or
No,
is it all under one?
All one, but what I do is I structure the initial capital partners get a higher return. They get up to 35% per annum return, and my second investors get between a 15 to a 20% return because the risk is less.
I see. That makes sense. So it's the exact same PPM, but two different classes of shares.
Correct.
Okay, good. Good to know. All right. Wakefield asks, did you start with raising your own capital from retail or private capital raisers? Or how did you get started raising for your first few projects? And how important was track record? You can read the chat.
Can you hold on? Can you pause that one question and just hold it for a sec? I just got to do something.
Okay. Sounds good. This is so interesting. I love he's just swinging it with us. I love it. We should have done this show right on his boat. That would have been fun. I might be too seasick for it, but
Hi, sorry, go ahead there. I just
Okay,
had to do something.
okay, yeah. So it's a two-part questions. It might be easier for
Okay.
you to look at the chat, but I'll read it. Did you start with raising your own capital from retail or private capital raisers? How did you get started raising on your first few projects, and how important was track record?
Track record is important. My very first joint venture deal I posted my deal on an online space and a person picked it up. And I've attracted capital through some of the hardest metrics, which are people that I don't know. That was a person I didn't know. But then after that, I started to develop a track record. And even before the track record, the biggest thing is knowing your stuff. So if you can come to that investor and you can answer all of their concerns and say, I'm an expert because you know what? The rental market rate is this, costs are this, and I know they're this. Why do I know that? Because I talked to 3 appraisers, I talked to builders, I've talked to this. In terms of rental rates on an existing asset, I've talked to 3 property management outfits. Not only that, I've looked online, I've seen other buildings, I've done all these things. So that also builds your track record in terms of credibility. The other best way to build your track record is to partner with someone who's already done it.
Yeah, that's
Um,
good.
so does that answer the question?
Wakefield, if you need clarification, you can go ahead and unmute yourself.
Hey, Sean. Yeah, thanks for that. My question was just on I guess your first deal, you said you posted online, and then from there, obviously you scaled up. So did that first investor continue to invest with you, or you said, hey, we knocked it out of the park on this deal, and now 20 other people want to join on our future deals?
They continued to invest, but then that story then carried on to future deals. For instance, that first investor got a 240% return. So she was pretty
Oh,
ecstatic
wow.
about it. Said it was a life-changing return over 5 years.
Wow. Okay. Okay, great. Yeah,
Yeah.
no, that definitely would keep reinvesting after that.
Yeah. And then from there, it just grows. And then really in my mindset, I thought that I need to be this person that starts out small and goes 1, 2, 3, 4, and I need to do it all myself. But my biggest growth in real estate in the last 2 years has been a big part because one reason is I attended Grant Cardone's course, and that really just changed my mindset in terms of you need a team to really accelerate your growth and to scale. And so the minute I started bringing on a team and expanding that and then leveraging their track record as well, that's when my real estate business exploded. And that's another big reason why I've been able to grow to 900 units in a short time.
Hey, great. Thank you.
Very impressive. Okay, Ramiro has a couple of different questions. Ramiro, do you want to unmute yourself and go ahead and ask?
Hey, Tim, sorry, I had to get back to my unmute button. Thank you. Yeah, so my question, one, just based on your latest response, was just how did you structure that first joint venture deal? What did that look like, that first one you did? And then the other question, oh, go ahead.
Yeah, go ahead.
Go ahead with that one first, yeah.
Okay, it's really what I did is I ended up putting in a little bit of cash. They put in the remainder. We split the profits 50-50 and then the cash flow 50-50 as well. And then we had a joint venture agreement written up clearly defining whose roles were doing what. Because if you don't do that, I can't reiterate enough that you will open up yourself to a can of worms. You clearly define what the responsibilities are of each party.
Yeah, I've been on the burnt side of that mistake myself. So yeah, I hear you on that.
Okay.
In terms of I was going to ask on your development projects, do you usually build in your pre-development costs into the initial raise for the acquisition?
Oh, yes. I run my whole project cost as total costs from start to finish.
And so when you said you do a 2-part raise, one for acquisition, one for construction, you include all that as part of that first acquisition raise. Is that right?
Correct. The number will be the same. I just won't raise the total amount at the beginning. It'll come at the second phase.
Yeah. Okay. And how do you structure your developer fee in that? I swear that's my last question.
Yeah, I include it in the development management fee, or I usually take that fee when it's upon closing because I've structured my deals not to close till we have the entitlement. So I've already proved value into the property before I actually take a fee. Because what happens development property is a two-part. So you got two profit centers. One when you entitle it, rezone it, and then two will be when you build it and sell it. Does that answer your question?
Yes, absolutely. Thank you so much.
Yeah.
Thanks, Ramiro. All right, Sam, you want to go ahead and unmute and ask?
Yeah, thanks for the time. Yeah, I don't do real estate, but I'm curious that what do you guys do when there is a good deal to buy, but there are other investors are interested and there is broker involved, and obviously the broker wants to sell the listing for the top dollar. How do you compete in that situation?
Can you speak up a little bit and shorten your explanation or your question?
Yeah,
Sorry, go ahead.
yeah. So the
Go ahead.
question is how do you guys compete? Team, can you hear?
Yeah, so I'll try to clarify it. Yeah, so basically, how do you compete when there are multiple people interested in the deal and you're going through a broker? So this has to do more on the acquisition side of the business.
I would say write a cover letter about who you are and why you want this property. Are we talking about residential? Are we talking about specifically development? Are we talking about multifamily? Because each audience will require a different interaction. If I'm talking to a mom and pop person, that requires a different letter. If I'm talking to a person that's just a company and they're a REIT, then I may not be talking to the same person. So that would require a cover letter, multiple offer situations, come in strong, obviously. And then really what I look at is I have a price and I beat multiple offer situations, but because I've attached a cover letter, I've gotten the offers accepted. And then I also increase my deposit amount, which a lot of people don't do. And then I create the image to them that I am the person they should close with based on my track record. For example, in the last 2 years, we've closed on about 8 properties. That alone speaks volumes.
Yep.
Did that answer your question?
Yeah, it does. But I think, let's say multifamily, right? And there is a 300-400 doors, and there are big private equities that they come in that they have more than $100 million under management. And you are a small firm compared to other folks that are in the market, and the people who are competing or who are selling, they are not really prone to the cover. It gets more sophisticated.
So then I would ask you this: if you have 300 or 400 doors, what brought your investors to invest with you? What was your story you told them? That's the same story you should be telling these people, because it inspired those people to invest with you.
I think what Sam was referring to, he's talking about if you were bidding on or making offers on a 300-400 units multifamily as an example, and you are competing against much bigger players that have hundreds of millions of asset under management. How can you win them over?
Having your ducks in a row with your financing, being able to close quicker than those guys because they have a bigger machine, so they're not able to close as quickly. And the majority of those guys are cheap. They won't want to give a big deposit, so you can also do a larger deposit.
Yep. Yeah, and I'll share one instance of a deal that I'm partnering on to raise for right now in Houston. How we won over a stronger bidder that has more asset under management is because our contract was a lot more simpler than theirs. And so the seller liked our contract. It's not convoluted. It's very clear. And that's how we win the deals. So.
I can back that one up, Tim. Actually, that's a good reminder. I had the exact same thing. How I structure my contracts is very simple. And I usually have 1 or 2 subjects, and that's it.
Yep. That answers your question there, Sam?
Yeah, cool. Thank you.
Yeah, thank you. All right. Alan asked, Sean, do you purchase land using your own capital or fundraise?
Both. Yep. In some instances, I'll use some of my capital and other people's, always using other people's capital. Some deals I have are 100% other people's money. Just because when you have multiple projects, I've got 7 projects running. You can't put money into every single project.
Very cool. It sounds like how long have you been a business owner, Sean?
I've been self-employed since I was 19. In real estate, I've been passionate also at the same age, but really more real estate focused in the last 5 to 7 years.
Yeah, so it's with you being a business owner for a long time, are a lot of your investors that invest with you, are they also business owners as well?
I know some investors are business owners, other people are just regular people that work and have a really good paying job or are retired. But yeah, I would say out of my investor profile, I would say probably 60% business owners, 70% business owners.
Very cool. Good to know. All right, Sgaan, we'll go ahead and wrap up our interview today. Really appreciate you for jumping in last minute, doing
I
your.
appreciate it. I'm sorry if I fumbled a bit there. I didn't really wasn't caught me off guard, but happy to share, and hopefully I gave some value here to people on the call here.
Yeah, you did. It was really good stuff that you share on the call here. So appreciate you so much.